Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable where we talk about current market conditions and any questions you might have about your subscription. Before we begin, if this is your first live event, do me a favor, type in first. This is my brief bio as Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Very proud of the experience. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. I'm going to go through specific trading examples, so please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we get into a trading plan, let's talk about current market conditions. So again, just to recap, after the Fed decision, rates, 10-year yield, 2-year yield, made a jump all the way to almost 5.13% and then it came back. And then we have similar reaction after the unemployment numbers rallied to almost 4.9, almost 5%, and now pulling back. Dollar also had a very strong reversal, trading basically actually close to the levels pre-Fed decision. So, and spiders are trading at 377. Spiders briefly broke through the downtrend, right? Spiders briefly broke through the downtrend. August downtrend, if you draw the downtrend line, we traded above 380 level, reached 390 level. Now we're trading below 380 level, but nonetheless, we are trading above the downtrend line. So that's bullish. We'll see where we're going to close. So far, semis are up 4.5%, spiders are up 1.8%, Russell 2000 up 1.9%. So pretty bullish setup so far. And it's so as long as we are staying above this level 370, right? That's the 50% retracement between 390 and 350, 52-week low, and November rally, November high, October rally, November high. As long as we're staying above 370, above this low, yesterday's low, I think bulls are in control. Obviously, current overhead resistance is around 380. We need to break above that level. Until then, we might continue to trade in the range. And then the next catalyst would be what is it? Midterm elections, right? Midterm elections, and then CPI data. So we're trading in this range, right? 370, call it 370, 390, right? This is a 50% retracement, so something like this. And then going into the midterm election, there are two outcomes, right? We're either going to break above 390 and potentially reach 400, maybe even as high as 410, right? So maybe another 30, 40 points from here. 30, I would say 30 points, right? So one is we can go up 30 points, right? After midterm election and CPI data, or if CPI data is worse than expected and negative surprise from the midterm elections, minus 350, 37 points, 27 points, so 30 points, retesting the lows. So we can drop 30 points and we can rally 30 points going into year end, right? So I'm gonna post the question, right? We need to rebalance, right? Going into the end of the year, right? Usually from seasonality point of view, usually pretty bullish time of the year. Everybody's in good mood. So based on, so let's go through the non-poll and just decide. One, we're heading closer to 400, 410, somewhere in that region, or two, we're heading closer to 52-week low, 350. So by, after midterm elections, by Friday, next Friday, do you think we're gonna break to the downside after the CPI data, or to the upside? So scenario 1 or scenario 2? Mark present, Marvin 1. Okay. Anyone else? Dan, Ian, John, Ken, Kenneth, Mason, Patrick, Peter, Virus, Walt. 2, 1, 1, 1, 1, 1. Okay. All right. Majority said 1. Majority said 1. I'm gonna go to 1, 2. Right. So I think dollar is pulling back significantly. Dollar is pulling back significantly. Yield is not going to 5%, right? We're back to 4.11. I think the rally continues. Right? I'm going to make an assumption that midterm elections, there will be some kind of win for the red, right? Either the House or the Senate or both. And I'm going to make an assumption that CPI data is not going to be worse than expected, right? CPI data going into, when is CPI data exactly? I think it's Wednesday. All right, election day Tuesday, and CPI data when? Thursday, right? It's Thursday. So, right, Thursday. So I'm going to make an exception that CPI data will be, 8.2% or less, right? Okay. Then the question is, okay, so then let's, roll forward, right? So we've kind of decided the year end, right? We got the year end answer. Let's talk about, this period of time, right? What do you expect the next 6 months, right? Two things can happen, right? We will either break 350, right? We will eventually break 350 and the market is going lower, right? Or we are heading higher. And let's go to the model. So the model basically says, in the next 6 months, potentially we can reach 300 level, right? The pattern continues of lower highs and lower lows going into first half of next year. So that would mean that one scenario we are at 300 level, right? We're approaching 300 level. Either in the first quarter or the second quarter, right? We're getting close to the 300 level, which would be minus 70 points, right? So minus 70 points. And the 300 level, that's scenario number 2. Scenario number 1, we're heading higher, 440. That's scenario number 2, plus 70 points. Yeah. So, are we heading 20% up or 20% down by June, right? So that's the second question, right? First half of 23. Scenario 1 or scenario 2? All right, let's look at that question. Let's look at the answers. All right. Mark 2, okay. Anyone else? Anybody 2, 1? Peter 2, okay. Todd 2, all right. John, Michael, Tim, Mark, Peter, Mason, Mark, Leland, Ken, 2. All right. Majority have said 2. So majority have said 2. I'm also gonna put down 2. So we do, so the way I'm gonna trade, if you follow the services at Tradespoon, right? If you follow either Elite Circle or Shadow Trader or Spread Trader, those are some of the services, or robo investor that I'm trading, you will see that short term, right? I think the market continue going higher, right? And I'm gonna trade to the upside. And then in the circle, but longer term, I think market is gonna continue to pull back. So realistically, right, I think we were at 400, model called 400 last month. So I think we can reach 400 level, right? Maybe even 410. But then something like this, right? So we go up, maybe another retest of this level, then we go up, down, up, down. So I would say this is the core scenario, right? And then maybe we chop along in December, and then next earnings season starts, and it'll probably be worse than expected, right? And then eventually we break, right? Kind of similar pattern that we had here, right? Middle of June to middle of October, 3, 4, 5 months, right? It took 5 months. So October, 5 months is, I don't know, April. So between this and April, we're making new lows. All right. Any questions on the expectation? Meanwhile, the most important, it's all about interest rates, right? You look at the 10-year yield, you look at the 2-year yield. As long as the 10-year yield and 2-year yield are heading lower, the rally will continue, right? You know, potentially 3.5, right? And then we chop along, and then we start getting higher. Assuming we're still talking about inflation, because one scenario we continue going lower, right? You hear on the news, you know, rates go up, it's bad because it's inflation, right? Rates go down, it's bad because of the recession, right? So in either case, it's, you know, both scenarios could be bad for the equity markets. And then same thing with the dollar. All right, so how do we help on, oh, before we get that, so how do you trade in current market conditions, right? Few things that I propose. One is the portfolio allocation, 50% of your portfolio to be in cash, right? The second one is portfolio drawdown. I propose to have no more than 4 positions and not risk more than 2.5% of account value per position, right? So I encourage you to do the following. One is participate in live trading rooms, right? So if you're a subscriber, you can participate in live trading room. If you're not, then I encourage you to visit our YouTube channel, right? Hit on subscribe, and then every Wednesday we have a morning bell and closing bell that you can participate, you know, without any financial commitment. Friday Strategy Roundtable, and I encourage you to do this for the next 3 months, right? For the next 3 months, participate in live trading room, either live or through recordings. They're also posted on the website that are available to you. Second one is maintain journal, right? Write down in your journal for 3 months. Oops. Three months. In your journal, for every trade, look at what your cash level is, right? I propose on average 50% of your portfolio to be in cash. The fourth is only have 4 positions, no more than 4 positions at a time. 5 is 2.5% account value, right? In your journal, you write down that no matter what I trade, stock or options, I'm not going to risk more than 2.5% of account value. That is my maximum risk, right? And we'll go over how to determine that, right? But if you're day trader, it should be less than 1%. If you're longer term trade, it should be less than 2.5%. So you choose your stop levels. You look at the worst case scenario, maybe, you know, look in last week if you're doing short term trading. If you're doing longer term trading, maybe you go back 2 weeks from now and just look at what those lows were And at that level, if the market retraces and reaches those levels from 1 week ago, from 2 weeks ago, from 3 weeks ago, right, then would be that at that point you're not down more than 2.5%. And if you are down 2.5%, you exit out, right? So the rule is you're never going to be down more than 2.5% per position. And the 6, if you trade in options, you choose a strike price based on your portfolio, right? So I assume $10,000 portfolio. Here it would be $250 worth of risk on $10,000 portfolio, right? So you're not risking more than $250 on $10,000 portfolio, and the strike price you choose on the $10,000 portfolio, you do stocks that are $100 or less, right? So then you do one contract, and if it's a $30 stock, right, you do 3 contracts, right? You always translate options, right? This is for options traders. You always translate option strike price into equity value, and you never trade on a margin. So if you buy one call of a $100 stock, you're trading $10,000. If you buy 3 contracts of a $30 stock, you're trading $10,000. And if the stock is $300, right, then you just don't trade, because you're managing one contract would be $30,000, right? So you just, based on your account value, you don't trade $300 stock. There's not that many $300 stock, but there are some. Any questions? So I encourage you to do this. This is step 1 through 6, right? I think these are the pillars of successful trading, of becoming a disciplined trader, successful trader. And I challenge you to do it for the next 3 months. And as long as you follow all of these directions, right, these 6 steps, I strongly believe, one of the reasons I'm here is that your performance will significantly improve. Whatever it was before, if you're positive, you're going to be more positive. If it was negative, it's going to be less negative. And that's why I'm here. That's what I believe in. So any questions on that? Mark, are there any sectors in the market that you think will be up while the rest of the market is going down? I mean, there are some sectors that will outperform the market, usually healthcare outperforms the market, right? We can see healthcare is basically close to 52-week high, right? So healthcare is one that usually outperform. I mean, obviously energy this year, I don't think it will outperform next year, so I would not. But healthcare, I think, will continue to outperform, and consumer staples, I think, will outperform. But that doesn't mean that we're not going to have, But the question was, market is going to be down and healthcare is going to be up. I don't think that's going to be the case, right? I still think you're going to have these drawdowns, right, of 16-20%. It's just in healthcare it'll be 16-20%, and technology will be 30-40%. But you're not going to have a situation where healthcare is going to go this way, right, and market is going to go this way. It might last a month or 2, right? But then at some point, like in July, you will have these big pullbacks, right? So in terms of asset classes, especially in the bear market, everything is highly correlated, right? Dollar will continue going higher. So one of the places you can buy is the dollar. I think dollar will continue going higher. I believe TLT will start going higher. It's been underperforming. I think at this point, once the inflation is going to start dropping, right? Once the inflation is going to be dropping, I think treasury market is going to continue going higher. Any other questions? All right, so how do we help? So elite circle, right? We talked about elite circle. Oh no, before we do the elite circle, let's do some other rules. Wait for 2 to 3 days to confirm the trend change, right? When I was doing the same exercise on Thursday after the Fed meeting, and market was here, right? Everybody said 2, right? Everybody said 2. Today I'm doing in the stock market rallies, everybody says 1, right? So it's kind of a herd mentality, right? You basically kind of, your past experience, you kind of extrapolate and you think that that will continue. So I encourage you, for that reason of the trading psychology, just wait 2 to 3 days, right? If we are done after the Fed meeting for the next 3 days, then yes, trend has changed and we're going down. But if one day after the Fed decision, market pull back, and then 2 days later, the interest rates and the currency is actually retraced all of the gains, then then no, the trend hasn't changed, right? The trend is still bullish. Be long and short the market at the same time, right? You want to be, if you out of those 4 positions right now, I would be market neutral, right? At this point, there's, I think, okay, maybe 20, maybe 30 points to the upside, but then market is gonna, I think, reverse. So have market neutral portfolio, then your portfolio drawdown will be less than 10%, right? It's all about portfolio drawdown, right? You want it to be less than 10% at any given moment, right? Market rallies 20%, market drops 20%. If you thought it was, market will be bullish, but it sold off, the goal is not to be down less than 10%. To be down less than 10%. Allow more space, right? Let's go over the calculations, right? So let's say you're bullish, right? Let's say you say, okay, Vlad, okay, fine, you convince me. As long as this holds, I think it's going higher. Where's your stop loss? Well, your first stop is 370. I mean, we could be there by end of the day, right? Market can go up 2%, reverse 2%. We've seen that multiple times. So 370 is probably too aggressive, right? If 370 doesn't break, next one would be 365, right? I would put at least 365, 367, and then 350, right? So if you think in hours, it's 370. If you think in days, it's 365, right? If you think in weeks, then it's 350, right? So let's say you say, okay, I get it. Let's do 365, right? My stop loss is right at this level, 365. So 365, it's at 377, it's 10 points, right? Your stop loss is 10 points, right? Because you think about days. And you think market will get to at least 400, right? 25 points, right? So you have 2-to-1 risk versus reward. So on the $10,000 account, the goal is to never lose more than $250, right? Whether you day trading or whether you are, holding position overnight, you never risk more than $250. If you 10 points stop loss, that means I can trade 25 shares, right? I can buy 25 shares. Right, and that's how many shares I can trade. I cannot do 1 contract of spiders because that means I'm trading $25,000. I guess you can do a spread, $5 spread and have 50% stop loss, or $10 spread and have, $250 stop loss. So you can still trade spider spreads. That's possible. But if you trade in single calls or single puts or just even spreads, I would encourage you not to do it with $10,000 because, again, I'd rather you invest into something that's $100 strike, XLK, for example. So this calculation is extremely important, and I encourage you to always do it, right? Always go through this exercise of figuring out what, where your stop losses are. Any other questions? Yes, Mark, right. So I think because of the at some point CPI data will drop, right? At some point CPI data will drop, whether it's next week or next month, but month over month CPI is going to drop, and then people are going to everybody's going to be thinking, okay, are we in soft landing or are we in hard landing? Is there a short-term effect on the revenue of the companies and margins of the companies, or long-term, right? And that narrative will change, and then if people think it's it's going to have a long-term couple quarters worth of recessions, right? 2, 3, 4 quarters, then TLT will go up. All right, any other questions? So in terms of subscription, we do have a lead circle every day. We have a morning bell and closing bell. You can participate. We do different types of trade, stock trading, option trading, earnings strategies like MCHP was one of the strategies. I did British Petroleum and Qualcomm, right? Qualcomm trade. So you see a lot of earnings, or you can see trades like XLK, where it's an option wheel strategy, right? Where I can manage option wheel, I have a stock position, and I continue to trade the calls, right? Selling calls against it, or have a spread. So those are the service. So that's a spread service is where I trade spreads like XLK, and then shadow trader or lead circle is where I either trade a stock or I trade cover calls, right? Kind of combination of both. So those are the services. You do get SMS message, right? Every time I trade, you can set up SMS. You can log into this web interface, see all of my orders position, completely transparent. I gave you the rule, always do one contract on $10,000 account. You do always $10,000 worth of options, right? So if it's a $100 stock, you do one contract. If it's a $50 stock, maybe you do two contracts, right? So I give you the guidelines, and then you just follow the trade. The goal is to become a disciplined trader, right? The disciplined trader where you're not affected emotionally by these, 2% up, 2% down moves. In terms of earnings, so this week, let's see, Starbucks up 10%, strong performance. MCHP had a good performance, right? So let me look. Yeah, Skyworks up 7%. Box is down 16%. Cloudflare is down 16%. We have Square up 17%. Square is up 17%, and PayPal is down 2.5%. And 2-year yield continues to drop. All right. Any other questions? All right. So Elite Circle, we talked about Elite Circle. We talked about Shadow Trader, right? Spread Trader is, again, you have access to the events and you have access to the live trading room. You can participate, you can look at the recordings, and you can get an SMS message. If you just want to trade spreads, we do have just premium service where you only trade spreads like Russell 2000. I'm bullish on Russell 2000, sold 180, 170 put spread. What else we have? Robo investors only stock trading. If you're not comfortable trading options, then you do have a robo investor. And then stock forecast toolbox, right? I briefly mentioned stock forecast toolbox. The idea that you can look at the support resistance, right? For today, you see support resistance, bullish trend. Model does predict that we can, get us close to 400 level, right? 395 level in the next 10 days. So I agree with the model, kind of positive trend. And you can put any stocks, right? You can put any stocks or ETFs, IWM or Microsoft or Google. So those are some of the tools that we are using. There's more research tools and more screeners tools. You can select, or we can have idea of the picks, right? Like active trader, weekly trader, monthly trader. You kind of on your own, right? Active trader, I like that model, right? This is a model that basically, and we handpick the stocks. Basically said these are the stocks that we think are going to outperform, right? MPC, Royal Caribbean, and CVS, right? Will give you support, resistance levels, right? And suggested entry prices. Third question was on Bollinger Bands. Yes, I do have Bollinger Bands. I looked at Bollinger Bands, 2 standard deviation. So Bollinger Band 2. 50 days, middle line is 50-day moving average, and it's a 2 standard deviation. 2 standard deviation. Any other questions? Let me know if you have any other questions. Ian, yeah, so the question was, why do I think that energy is going to be down? Yes, I think, the only way, right, the only way we can reach 300 level based on the way things are currently are, right? I always reserve the right to change the opinion based on the data, but assuming that inflation is persistent and assuming, Fed is unaccommodated, right, that they are not gonna, they will decrease the magnitude of the rate in hikes, but they're still gonna continue increase, we're still gonna be at 4 or 5% till the end of the year, right? Longer than everybody anticipated. In that scenario, there will be destruction of demand, right? You can see it already in Amazon earnings, Microsoft earnings, Google earnings. You already see these trillion-dollar companies or billion-dollar, mega cap technology stocks and consumer discretionary stocks. They're, consumers spending less, right? Consumers spending less. Consumers going to travel less. That means, they need less energy, right? Less energy, right? Would you look at MARA, Marathon? Marathon digital processing. Is this Bitcoin? Are they involved in Bitcoin? Data processing, what kind of data do they? I don't trade Marathon. In mining cryptocurrency was the focus on blockchain ecosystem. So my opinion on Bitcoin, it's again, it's almost one-to-one correlated to the risk taking, right? And you can see that the Bitcoin, This is good. 20 months out. I'm trying to show the chart that shows the high and the lows, right? So the Bitcoin is very highly correlated, right? It lost 2/3 of its value, right? Right, it went from 60,000 to 20,000. So all of the stocks that has to do with cryptocurrency will have similar chart patterns. I mean, maybe one will outperform the other by a little bit, but in general, the path of least resistance is to the downside, right? So if market is going to drop 20%, Bitcoin is going to drop 40%, right? So Bitcoin is going to be around 10,000, right? So I would, trading opportunity, sure. Short term, it might jump. If market going to go up, Bitcoin is going to go up, right? Today, Bitcoin is, follow GBTC, it's up, right? It's up 6%, right? So Bitcoin is up today 6%, and probably till the end of the year, it can continue going up, maybe 15, maybe, continue going higher. But if the market going to reverses, it's very highly correlated to this high yield, right? And the pattern is pretty bearish, right? If you look at the high yield, we are basically at 2020 low. And if I have to guess, we're approaching 2008 low, right? We're approaching 2008 low. Nizar, what do I see? Spiders, as I said, 400. I think that in the next couple of weeks, right, beginning of December, 400 level, right? I don't think we're going to break this level, right? I don't think we're going to break this level. So I think it's something like this. So 410, 415. I think that's where we can. I mean, obviously we overshot here. I didn't think we're going to break, but so we did come, halfway between here. It could be the same thing where, I think it's going to be here, but it'll jump to this level. I mean, all of that is possible, right? That's kind of hard to approximate, but it's higher, right? I assume it's going to be higher. Anybody else? Nizar, yes. If Spider is going to go higher, I do believe QQQ will follow along, even though it's been underperforming, right? It's been underperforming because of the mega cap technology. It's almost at 52-week low. I think it will start outperforming towards the end of the year, because a lot of it is interest rate sensitive, right? It's extremely interest rate sensitive, and as long as interest rates are going to continue to drop, then technology is going to start performing well. Thank you. Why bull in the middle of digital crisis and high costs? See, CCL it's an active trader, right? Active trader holding time is 1 to 2 days. So if you look at CCL, this is short-term trading, right? Short-term trading. We are trading in the bear market, right? We're trading in the bear market, Model C pullback. So it's a go long CCL, but holding day is 1 or 2 days, right? You get in and it's up, 1-2%. I don't know, from this morning. All right, so you got in at 9:10 and in 9:30 you get out, right? Looking for 1% gain, 2% gain. So 10, 20 cents up and you're out. So it's a short period of time, right? So active trader, you holding is 1 to 2 days, right? This is a short-term trade ideas. If you want longer-term weekly trader, that's 1 to 2 weeks. 2 to 5 days holding time, 1 to 2 weeks. If you want longer trade holding time, it's monthly trader, right? Monthly trader. 5 to 20 days holding time. Trader, no forex. Yeah, we don't have forex ideas. Let's look at the earnings. Square pulling back, not pulling back. Kines, thank you. Ian, yeah, I mean, at ExxonMobil, Chevron, ConocoPhillips, they're all, XLE is moving high. It's a little bit overdone, right? You can see earnings season is kind of winding down, right? And it's not breaking through the new high. Some of them do, like ConocoPhillips, did break out. I mean, you can see it's kind of reversing. Chevron also broke out, but reversing. I would not chase these stocks to the upside. If anything, I would wait for pullbacks. Any other questions? It's 10:15. Let me see anything else I want to cover. So we talked about active trader, weekly trader, monthly trader services. We talked about YouTube. Please, click on subscribe button. If there's any videos that you find useful, please click on them and share. If you're part of any forums or you're part of any other. Thank you, Ian. Forums or any part of social media where there are traders. Go out, vote. Vote is important. So take this opportunity to vote. Expect more volatility on Wednesday and Thursday. So next week is going to be volatile, right? Next week is going to be extremely volatile, right? I assume more of this up and down action. As long as we're below 380, there's still a risk of retesting this yesterday's low. We'll just have to wait and see what happens. Any other questions? All right, it's 10:16. Give a couple minutes, see if you guys have any questions. Well, look at the market. Trader, I'm not sure what you refer to Forex trade. If you do me a favor, open up a ticket and we can answer your question, but we don't have Forex trading under Tradespoon. It appears trader, so I don't see it. Kines, is there a model format for the journal? We don't have like a model for journal. During live trading room, right? I do on some of the orders, not all of the orders. I do put notes, kind of example of journal. What do we do? Maybe Excel. Okay, let's see. Yeah, so I would put notes, but usually journaling is kind of a free format. But you do want to address some of those points like number of position size, and such. I think I answered your question, trader. I'm not sure. I mean, we have multiple traders, so I can't really know what the name is. But we don't have Forex. Okay. Any other questions? I mean, we do have stock forecast toolbox, right? You can type in, let's say you want to trade euro, you can type in FXE, right? And it'll tell you what we think about, FXE, right? The euro through the ETF. So you can use that as a guidelines where, the models see the stock going. Any other questions? All right, if there are no other questions, that's all I have for today. Thank you very much. I will see you at the closing bell, some of you. And again, all eyes are on midterm election. Expect more volatility like we had this week. Towards the next Friday, we'll know. If next Friday we're trading above 380, then we're heading higher, right? If next Friday we're trading below 369, we're heading lower, right? So next week is going to set the tone probably for the rest of the year, right? For the rest of the year. I mean, it could be a situation where this was the top 390. And that's what actually model predicted. But, judging as of right now, based on the current price action, I think there's more room to the upside towards the end of the year. Todd, thank you. Marvin, thank you. Any other questions? All right, guys, you're awesome. Thank you for participating. Please like the YouTube, click on subscribe, click on like. I like likes, YouTube likes. So those will be a huge favor if you can subscribe and either participate live or at least view the recordings. YouTube will notify every time we post. We do have live broadcasts, right? If you go to videos, upcoming events, right? So it tells you when the next upcoming live events are. So please join them. All right, thank you very much and have a great day.